retail sales, that one of the numbers was strong. Got a little bounce in the dollar off that. I'm actually looking for some stabilization in the dollar, a little bit of a correction in the dollar, along with the market, where the outflows stopped for a few weeks going into the end of the month. So we did bottom near that lunar eclipse, something that I talked about before it happened. And perhaps we rally into month's end into the solar eclipse. But just looking for a 2 week rally. There's a lot of debate on what kind of bounce we could get here. Um, Most of the people whose work I respect are looking at it as maybe 38% is all we should get after this. Not to look for 61.8. So I could lower it, maybe 57.80, 58 on the S&Ps. But let's go to the chart so we could see the picture. All right, I'm going to start off with currency, because the headline about today's show was retail sales could add some stability to the dollar. And of course, the major trend is down. That's obvious, okay? And, we're getting a little divergence here. We might make a three down here, but I'm thinking that, see this last low, a little under 30, and we're not that far from this low, but I'm expecting some type of recovery, maybe up towards 104.80, 105, 105 and a half. That would really be more than I'm expecting. Just like the S&Ps, I don't think it's going to be a real strong rally. I think it's going to be, a 38% retracement. To update you on the Aussie, that was taken last week at right here at the 72 level, looking for a breakout. We have the breakout. And even though it's a breakout, I'm going to book something. So, this is pretty close to 70 pips from down here. So you could put a little in the book, and now you could trail your stop for a profit stop. You don't want to see this breakout negated. So you could pull it up to, like 63, then you have like 63.10. That would give it a little room if it tagged the line and went through a little bit. And that's a profit stop for you of another 20. So that's how I would treat that. The yen, I'm still think there's a shot, especially if I'm right about the dollar doing something. Now we have a ton of central banks, 6 central banks this week. So be flexible, reduce leverage. I'm not talking just about the Fed. We have everyone, Bank of England, Rick's Bank. I forgot the other three, but there are three on tap. So I'd be careful with that. Now, last week's call of the week was buying the silver here at 31.80. And I know that we had a great run all the way up to 34. So it was over a $2 trade. I don't believe that we're completing yet. This looks like we're doing some flagging. Maybe we pull back towards 33, but I'm still looking for that 35 and a half level on the weekly before we're complete. Maybe it happens before month's end. Everything rallies into month's end. What has been rallying does, except maybe a dollar pullback, but still looking for the three drive on this formation. See what it looks like on the monthly for the hell of it, for the halibut, which I don't eat anymore. But you're looking at this formation here. So, after we get this three drive to a top, which is up here, this comes in above 36. There's a fib count right around 35.90 or so. So we'll see that. Then I'm expecting a pullback to 27, 26 before the real big move happens, most likely in the summer. So if I were you, I'd be on this next push in silver, I'd be lightening up on the um, gold shares, which have they're all having a great month. Nice move across the board in all of them. And there's AG. Here's the juniors, SILJ. Here's Fortuna, all looking good. Maybe flagging here, so these aren't done either. GDX at new highs. All right, Newmont acting okay. Not quite at new highs. Really getting a nice move out of BTG. Boy, that come out of the hole from 210. So the shares still look good, but I think we're within a week or so where you might want to take some of these off again too. Just looking at, let's go back to GDX and look at a longer time frame. I think we're confirming the highs here on the 4-hour. We weren't last week, but now we are. The daily is still diverging pretty good, from this. Maybe this is drive one, this is drive two, and we get some type of pullback. But you need better divergences on the 4-hour. If you trade divergences just off a daily, you're going to be early. So you see this high, I don't want to do anything about it because of that high. And I think you could key a sale off of silver getting to its objectives. Let's go right to risk. Okay, so I talked about the lunar eclipse. I was on Maggie Talks. The video's out there, and it was on a Wednesday. And I said that we would bottom either Thursday or Friday into the lunar eclipse. So here's what we're talking about. 38% is 57 and a half, right around here. Halfway back's 58.30. Time-wise, I'm not going to concern myself with price until sometime late next week. So they're going to be clawing back the put premium, something I talked about. I don't know how much they're going to get back, but they're going to get back some. The enough to fry like people who owned Apple 200 puts, right? It almost got down there, looked like it was. So here's one of my shorting candidates. I want to see where it is in a couple of weeks. Are we going to get back above the breakdown, or is that all it has in it? And I'm also interested in shorting the banks. This was a huge move from 48 to 39. That's 20%. So I'm going to be looking at shorting financials. NVIDIA, it could be running out of juice here. It still has a stronger looking chart than Apple. But I'm not as bearish on this as I am on Apple and the banks. So I'm going to go to my higher. This is a market that really broke down. It'd be great to see a rally back to 230. I don't think we'll get it, but these lows were pretty important at the 50% level. See how we held here. So that's something that I'm considering. Crude is foiling my plan a bit. Rains are taking off. It's up a buck, still in the sideways range. I don't believe this is going to be a bottom. I still think we're going to take out the stops under 65, head towards 62. And let's wrap it with yield. So 10-year is knocked on the door. Look, it knocked on the door again at 433, at 433. So, it could go either way. Okay, with my view on the yen, my bias is that we get this market back closing over 433 and see what it could do to the upside. But I'm open to, if we take out 4.25, we're going the other way. But this is a key week with the Fed meeting. It's going to be interesting to see if our Treasury Secretary can find enough T-note buyers somewhere to do it to keep the yield under 433. Otherwise, it's a breakout of a ascending triangle, right? Here's the triangle. You have that flat line, which makes it an ascending triangle with a flat breakout over 433. So how do you come up with a count off this formation? The low was, call it 410. So over 34, it's going to be 34. That's going to take you up to, 460, 470, which is this old high. I don't think the market's ready for that kind of interest rate, except it could dispel the fears of a growth scare for a while if we had rates going up and flip the narrative of us teetering on recession for a while. Now, I'm not saying this is the long-term bottom in the market. I have to consider that with what we've done, especially in NASDAQ, which down 20%, see what it does up here around 23, which is 30%. That this kind of move, which was very persistent, has another wave to the downside after a bounce. And the dollar, like it was cratered, just like NASDAQ, will stabilize and bounce. So that's the way I see things. Okay, and long the dollar for that bounce, see if it happens, not risking the farm. When I go counter trend, I'm much lighter than when I go with the trend. So, for example, long here may be a one lot, but we get to 104 and a half, 105, much more. Okay, not just a feeler. Okay, it would be more because then I'm with the trend. Okay, so remember, don't just count your pips, count your blessings. I have an interview Wednesday. You'll hear from Mike on the Power Hour. Have a great day trading, and don't just count your pips, count your blessings.